My fellow investors, fellow Jamaicans, welcome back to the Monitor JA channel. And today, we're going to be doing another one of our financial deep dive. We are going to be unpacking a major sigh of relief for the Caribbean's banking sector, as one of its true heavyweights, National Commercial Bank Jamaica Limited, or NCBJ, just received a significant nod of confidence from the global stage. In a move that caught the attention of investors across the region, Fitch Ratings has officially removed NCBJ from its Rating Watch Negative list. This effectively cancels the immediate threat of a credit downgrade that has been looming over the institution like a dark cloud for months. For those who have not been following the play-by-play, this all started back in late 2025 following the passage of the devastating Category 5 Hurricane Melissa. The storm left a trail of devastation estimated at nearly $9 billion, or about 40% of Jamaica's GDP, leading many to fear that the nation's largest bank would be crippled by loan defaults. But after a rigorous review, Fitch has affirmed NCBJ's long-term rating at BB- and revised the outlook to stable. This means that the agency believes that the bank's financial foundation is sturdy enough to withstand the shocks caused by the hurricane without losing its footing. One of the biggest reasons for this confidence is NCB's sheer scale. As of early 2026, the bank controls roughly 35% of all banking assets in Jamaica and 31% of all deposits. This dominant market position gives it a massive, stable funding base that smaller competitors simply do not have. Fitch's analysts revealed that despite the widespread damage to the western side of the island, which actually hit the tourism and the agricultural sectors hard, NCBJ's loan performance actually showed signs of improvement. In fact, the bank's 90-day non-performing loan ratio dropped to 3.9% in the first quarter of the 2026 financial year. This resilience is partly due to the bank's conservative management of its liquidity. Rather than seeing a massive outflow of cash after the storm, the bank's liquidity actually strengthened. Its loan-to-deposit ratio sat comfortably at 69%, indicating that they have plenty of room to maneuver and support reconstruction efforts. However, it's not all smooth sailing. Fitch did note that the profitability had taken a hit, with the bank's operating profit to average assets declining to 0.8%. This dip reflects the higher cost of doing business post-disaster and the necessary increase in impairment charges to cover potential losses. The agency also kept a close eye on the bank's parent company, NCB Financial Group. While the bank itself is rated at BB-, the holding company is rated one notch below at B+. This is due to double leverage, a technical way of saying that the parent company carries a higher level of debt relative to its equity in its subsidiaries. Now, despite these nuances, the takeaway for the average investor and the customer is clear. The hurricane risk that everyone feared has been deemed manageable. The bank's capital adequacy ratio remains at a healthy 15.2%, well above the regulatory minimums required to keep the doors open and the lights on. This news does not just benefit the bank, it is a bellwether for the entire Jamaican economy. It suggests that the country's financial infrastructure is much more sophisticated than it was a decade ago, thanks to a multi-layered disaster financing and a commitment to fiscal discipline that not even a Category 5 storm could break. Now, with this downgrade warning out of the way, NCBJ can now pivot back to its long-term goals. We're talking about its digital transformation projects and its goal to become a truly regional powerhouse, all while supporting the massive reconstruction efforts that will define Jamaica's 2026 and 2027. It's a fascinating look at how big data and conservative banking can collide with the unpredictable force of nature and come out on top. It seems that for NCBJ, the forecast is finally clearing up and the path to growth is back on the table. So now it's over to you guys. Let me know in the comments below. What do you think of Fitch Rating officially removing NCBJ from its Rating Watch negative list? Drop your thoughts in the comments below. And before you go, my fellow investors, quick update. Money Talk JA now has a newsletter. Hit the link at the top of the description to sign up to join our growing community and make sure that you never miss an update. Thank you for watching, and please hit the like and subscribe to get more videos like this in the future. And click the link on screen now to watch another Jamaican financial content. Catch you in the next one.